Right. So our main focus for the class today is basically on what we call the input tax. Right. So we're still on VAT, but in particular, we want to zoom on input tax. Right. Just to recap from our week, from last week, right, we said that when we talk about input tax, right, this is VAT component, right, on payments. Sorry. I want to do output tax, not input tax. Right. So this is the VAT. This is the VAT component of payments received, right, from an entity's customers. Right. So when you sell goods to a recipient or to a customer, right, and then they make payments over to you, right, at times you collect money that belongs to SARS, which we call input output tax. Right. So remember, this is payable over to SARS. Right. This is payable over to SARS. Then we are saying output tax, right, comes, right, from invoices, right, issued by a vendor, right, when making taxable supplies. Right, issued by a vendor when making taxable supplies. Right, so obviously, for an invoice to carry VAT, it means the person invoicing must be a vendor. That's number one. And the person must be making taxable supplies. Then they are obliged at law to say on whatever price that they're charging their customer, they must levy VAT currently at 15% over and above what they are charging the customer. So the extra amount, the 15% that they charge, that amount belongs to SARS. At the end of it all, they must remit it over to SARS. So therefore, it becomes output tax. So VAT component on payments received from an entity's customers. So that is what we call output VAT. Right. Remember, we also went on to explain that there are different types of supplies. Right, there are different types, right, of supplies. Right, then in our supplies, we then mentioned that there are two different categories. Right, category number one is what we call taxable supplies. Right, in which case, under the taxable supplies, we have what we call zero rated, where VAT is going to be levied at 15%. Right, and then we also have, standard rated. Right, the standard rated is the one where VAT is at 15%, and then we have the zero rated, right, where VAT is charged at 0%. Right, then we have exempt supplies. Right, so no VAT is charged. Right, no VAT is levied on an invoice when an entity or a vendor supplies exempt goods. So we also mentioned that the zero rated supply, this is section 11, right? And then this is section 12 of the VAT Act. So it's just a list that you are given by SARS to say these things, they should be zero rated, these things should be exempt rated or should be exempt supplies. Right. So in essence, we are saying output VAT comes about when a vendor sells taxable supplies to a customer. Right. Remember, there are two categories of taxable supplies, the standard rated and the zero rated. And then obviously a vendor will not charge VAT, right, if the goods are exempt supplies.
Mm.
That's what we looked at particularly in the previous week. We just went at the top, we just looked in passing at how the VAT system works, and this is what we discussed in connection with VAT output. So we want to go in more detail concerning this, but any questions before we proceed with people? Any input, questions?
No.
Right, so let's proceed now to our work. So we are looking at VAT input in detail, VAT output, VAT input, we'll look at it next week. Right, so we want to look in detail at VAT output. So this is largely a theoretical session. Right, we'll probably do calculations next week when we do what is called deemed supplies. Right, so under the output system, we're saying there are three situations. Right, there are three situations or circumstances, right, in which output is levied. Right, in which output VAT is levied, right, by a vendor. Right, number one, it is when supply of goods and services. Right, on supply and services. Right, by a vendor. So there will be situations that will demand that VAT be levied on the supply of goods and services. Right. There is also the importation of goods. Right. Importation of goods. Right. Into South Africa. Right. Again, it will attract import VAT. Then there is an importation. Right. Of services. Right. Into South Africa. Right. So these are the three situations in which there may be VAT that is actually levied. So let's look first at supply of goods and services. Right, let's look at the supply of goods and services. So this is our instance number one, in which VAT may be levied by a vendor. Right, so we are saying here to attract, right, VAT, right, they should be. So these are the things that must be satisfied before a supply of goods and services can attract VAT. So the first thing is that there must be a supply. Right. Then the second thing is that the supply should be of goods and services. Right. Thirdly, is that these must be made by a vendor. Right. And finally, in the course of furtherance of business. Right. In the course of furtherance of business or enterprise.
Because of
Right. So instance number one, where a supplier who is a vendor will charge VAT is when there's a supply of goods and services. But remember, it's not automatic that a supply of goods and services will attract VAT. It must be a vendor who is making what? Taxable supplies. So then we continue and say VAT will be charged when there is a supply of goods and services by a vendor in the course of furtherance of business. Quite technical, there's a lot of theory that you must cover under that particular session. You need to understand what the definition according to the VAT Act is of a supply. Right? Does providing goods or services to someone always attract, or is it automatic that it's a supply or not? You need to be able to answer that by reference to the definition. Right? What do we mean by goods? What do we mean by services? Which items qualify? Which items, though satisfying the definition of goods and services, are specifically exempt from being treated as goods and services? Right? Vendor, how does one become a vendor? What are the requirements for one to register as a vendor? In the course of furtherance of enterprise, what is it that is defined as enterprise according to the VAT Act? Right, so we need to look at that in detail, right, starting with the word supply. Right, so starting with the word supply. Right, so supply has got many meanings. Right, there are many things that constitute a supply. Right, so in the context of the VAT Act, right, we are saying supply means, right, a sale agreement. Right, so it could be a valid sale agreement. Right, it can mean a rental agreement. Right, that is treated as a supply. So, for example, if I sell goods to someone, right, where I transfer the economic rights of that goods, the rights and the reward of the goods to the person that is buying, that's a sale. I'm selling my car, automatically it becomes the property of someone else, that's a sale. A rental agreement, it may not be a sale to that particular person, but I may lease the asset to someone for a period of time, or the person just be renting the asset for a period of time, right? It qualifies for the definition of supply. Right. Then we also have what we call installment credit arrangement. Right. Again, it constitutes a supply. Now, a sale may be an outright sale, cash sale immediately, or it can be by way of arranging a credit arrangement, maybe buy to sell or rent to buy or lay by or something of that sort. As long as it's a credit installment arrangement, it will also qualify, right, as a supply. Right. What must be clear about all of this, right, is that it can be voluntary, right? A supply can be voluntary, right? A supply can be compulsory, right? E.g., by way of law, right? An example of this would be expropriation, right? Enforced sale, right? E.g., maybe say an enforced sale, for example, a company may be forced maybe to dispose some assets to settle a debt. Right, it's a requirement by law. It's not voluntary, but it doesn't really matter. A sale has taken place, so we must be very clear that a sale is not only something that is voluntary. It can be enforced by law. Right, it can be a monetary, right, or even barter exchange. I hope I get my spelling correct there. Right, barter exchange is also acceptable as even if there is no monetary payment that has taken place, if there is barter exchange and quantities or values can be measured, then it will still constitute a supply. Right. So you need to be very clear that on the definition of a supply. So if you rent out a property, it qualifies as a supply. If you sell something by lay-by, it's a supply. Right. If you sell for cash immediately, that's a supply. If you are forced by the government to sell an asset, that's a supply. If it's expropriation, the government wants to build the house rent, your house is along the line, then they enforce you to actually sell the asset. Of course, they pay you. That's expropriation, but this time with compensation, of course. All right. So therefore, in that instance, again, it constitutes a supply. So you must be very clear about this. Right. Remember, a supply, right? A supply involves, right, a supplier and a recipient. So there are two parties involved when it comes to a supply. Right, so it's clear there must be a supplier and there must be a recipient that is involved in all of this. Right, we also have what we call deemed supplies. Right, so on deemed supplies, we are saying, right, the definition of supply is not met. Right, definition of supply is not met. Right, however, such supplies or such transactions or occurrences, right, will be treated as a supply. Right, so under this section, we then have, right, what we call, right, number one, ceasing to be a vendor. Right, number two, deemed supply. Not deemed supply, indemnity supply. Right, we've got fringe benefits. Right, we've got independent branches. Right, there are five of them. Right, and then we have, what's the other one? Right, so payments exceeding consideration. Right, payments exceeding consideration. Right, so these are examples of what we call deemed supplies. Right, so in essence, we are saying when we talk about the supply, we are talking about these three things here having taken place. Right, however, there are certain situations where such things have not taken place, but we will still treat this as a supply. Now, this one, we are basically looking at it next week in detail. Right, there are calculations here. So it will take a full lesson for this one. We'll cover it next week. It's a separate section altogether. Right, but you should just have an idea of what supply is. So whenever we talk about supply, this is what we are talking about. Any questions, good people from the floor? Right, so any questions? Right, remember, we are talking about instance number one or number A, where VAT is going to be charged. Right? We're saying VAT is going to be charged in one instance where there is a supply of goods and services. However, to attract the VAT, there must be a supply, which means we must satisfy this discussion here, the definition of supply. Then it must be a supply of goods and services by a vendor in the course of furtherance of business. So we want to look at what the term goods mean. Right, it must be a supply of goods. So what does the term a good mean in this instance? Right, when we talk about goods, it simply means movable property. Right, it could be movable property. It could be immovable property or what they call fixed property. Right, it could be any real rights. Right, to property. Right, any real rights to property. For example, you may be holding a certificate that gives you ownership of a particular asset. You may be having title deeds to a property. Right, that's those are rights. that actually give you ownership of something of value, which we call property, right? And then electricity as well, right? This is specifically included by the Act. So it doesn't really look like it makes sense because you would expect electricity to be maybe a service because it's an intangible. Right. However, the Act specifically included electricity to be part and parcel of what they call goods. So whenever there is a supply of any of these things mentioned above, it may attract VAT. Right. The term goods, right? The term goods exclude the following. Right. The term goods, right, exclude the following. Right. So the first thing that we have is money. Right, both coins and notes. Right, so the definition of goods specifically tells you to exclude money from the definition of goods. So therefore, if you supply money to someone, maybe in the form of a loan or you're a financial institution, it is not a supply of goods, which means it will not attract what? VAT, because it's not a supply of goods. Right, however, we must be very clear on this one, right, except coins, right, made of precious minerals, right, made of precious minerals. So if you have rand coins, that is not a good, right? Your normal rand coins, that's not a good. However, if you are in possession of gold coins, silver coins, krugerrands, right, those kind of notes that are made of precious minerals, right, they will be included under the movable there. Right, so you must be very clear. Normal money is not goods, but the supply of precious, coins made of precious minerals, that one qualifies to be good. Right, then we have mortgage. Right, mortgage rights. Right, remember we have real rights to a property. However, mortgage rights do not qualify to be part of goods. And then we have something called revenue stamps. I'm not really sure I understand what the revenue stamps are, but with my little understanding, these are stamps that are given when you have paid certain types of tax. I think it was used with Dala, not now. We no longer have this. But if you see revenue stamps, they are actually listed in the Act to say these are to be excluded from the word good. Right, remember it is a supply of goods or services. So what does the term services in this instance mean? Right, so services is a broad term, right, encompassing almost everything that is not included in the word good. So if you make a supply and the supply does not qualify to be a good, right, most likely that supply will be deemed to be a service. Right. So the official definition of that, it says includes, right, granting, right, it says granting or cession, right. I'm just giving you the formal definition. If you go to the standard, to the Act, granting, cession,
Hello.
right, or surrender. Right, please mute if you're having any noise on the side, right, of any real rights, right, or making available an advantage,
Ande hampir ternyata.
right, or making available an advantage, right, to another. So that is the official definition. Doesn't really make much sense, right? But we can give examples of services, right? What I'm doing now, which is tutoring, that's a service, right? You can have plumbing, right? You can have electrician, right? Beauty salon, right? etc. You get the idea. So most of the time, if you are making a supply, first you check if it qualifies as a good. If it doesn't qualify as a good and is not exempt, then you are dealing with a what? With a service. So that's what the term in this instance service actually means, right? Any questions, good people, on that? Right. And then the third requirement for a supply of goods and services to attract VAT, remember we've said there must be a supply, right, of goods and services. We've defined that by a vendor. So the third part is vendor. Right. What is a vendor? Right. A vendor is any person, right, registered, right, as such, right, by the VAT Act or through the VAT Act. Yes, ma'am.
Yeah.
Right, through the VAT Act or any person expected to be registered. So obviously, a vendor is someone who is registered as a vendor through satisfying the requirements of the VAT Act, or any person who may, as one reason or another, qualify as a. Please mute, thank you. All right. Right, so any person registered as a VAT vendor through the VAT Act, right? There are two ways in which someone can register as a VAT vendor. Right, there are two ways in which one can register as a vendor. Right, so obviously this theory is important. You can get a question regarding this. Right, theoretical question number one, yes, we've got voluntary. Sorry, let's start with compulsory registration. Right, let's start with compulsory registration. Right, so with compulsory registration, we are simply saying, right, if you satisfy all the requirements as stipulated in the VAT Act, then you are automatically expected to be registered as a vendor. So obviously you have to submit the documentation and be registered. If you are not registered and the authorities find out, they will then treat you from the day that you qualified as a vendor. If you did not comply with the VAT tax, you will then be expected to comply and you'll be charged interest for not following the law. So compulsory registration means you have qualified to be a vendor according to the law and you should immediately register, usually within 21 days. If you fail to do so, when the law finds out, they will then register you and then they will go back and check your affairs, your tax affairs, and they will demand payments and you may be charged interest if you were supposed to make payments and you did not make them. Right? If you are expected to have been issuing invoices with VAT and you did not issue them, then you'll be the one now who will be charged for that VAT that SARS would have been reduced off. So that's compulsory registration. Now, compulsory registration normally has got three instances in which one has got to register. Right? So we can say that right, a person is expected to register, or let me wait it right. A person qualifies right, for compulsory registration. Right, if then I'll say bullet number one, his or her, or let me not write his or her, let me say if the value or, right, let me write it differently, at the end of the month, right, at the end of the month, right, in which his or her taxable, right, his or her taxable supplies, right, from all his businesses, right, exceeds Rand 1 million, right, for the last 12 consecutive months. Right, so if your taxable supplies for the last 12 months exceed 1 million, then you are compulsorily expected to register as a VAT vendor. Right, so they are very clear. Your supplies that they count are taxable supplies. So that is when you make zero rated, when you make standard rated supplies and they tally up to a value of more than 1 million, right? If you reach 1 million plus one, then you are expected to register as a VAT vendor. And we must be very clear, they don't count one business. So if you are running a couple of businesses and they've got a couple of accounts, right, they add them up to reach the 1 million there. Then you'll be expected to register as a VAT vendor. Right, the other instance is at the beginning of the month. Right, at the beginning, right, of the month, right, in which, right, your total taxable supplies are expected to exceed, right, let me be very, very clear, total taxable supplies from all your businesses, right, are expected to exceed around 1 million, right, in the next 12 months. Right, in terms of written down contracts. Right, so you've just signed multi-million rand tenders, which for the next 12 months will entitle you to a total of taxable supplies that exceed 1 million. So at the beginning of the month in which you immediately qualify for this type of registration, right, then you are expected to register, right, as a vendor. So this is your situation number two, and this occurs at the beginning of the month. Then the last one, right, is for someone who does not satisfy the threshold of 1 million in taxable supplies, but is carrying on an enterprise, right? Is carrying on an enterprise, right? Where there is a regular, right? Where there is regular supply of qualifying goods or services as deemed by the commissioner. Right, so this is the preserve of the commissioner. right? So you may be an enterprise that does not have the threshold of 1 million in terms of taxable supplies, but the type of products that you supply are allowed by the commissioner uh, or the commissioner deems that even though you don't have the 1 million, you should register for VAT purposes for one reason or another. Maybe it's good for the economy. Maybe you are doing what we call, we are supplying goods that benefit the community. And it is crucial for your business to have a VAT certificate. So the commissioner can look at your circumstances and then say, with the goods and services that you provide, even though you don't qualify, we will allow you to register for VAT purposes. You are expected to register. So normally you wouldn't get a question on that. Most of the time you'll get a question on the first two bullets. This one is the preserve of the commissioner. It means the commissioner makes a decision and say, okay, register this person. Right, so that's what we call compulsory registration. Anyone who satisfies this or who the commissioner deems to be suitable, appropriate, will then be expected to register. Right, then we have what we call voluntary registration. Any question on the compulsory one?
No.
Right, so we want to look at voluntary registration. Now, this is when someone is not expected to register for VAT purposes compulsorily. But maybe for the purpose of your business, it is crucial that you register. Maybe you are dealing with government departments that require that everyone that they deal with, every supplier, should have VAT. And you so desire, therefore, to be registered for VAT purposes, even though it is not compulsory. So you are the one as the supplier who is driving the request for registration. Right, so we are saying that there are also three instances in which a person can be voluntarily registered for VAT. Right, so we can say a person, right, can voluntarily register as follows. Right, the first instance is when, right, the value of taxable supplies, right, or let me say at the beginning of the month or end of the month, right, in which the taxable supplies from all businesses, right, exceed 50,000, right, for the last 12 consecutive months. Right, so therefore you can apply for registration if you qualify. Remember, it should be taxable supplies, which means we don't include exempt supplies here. It should be zero rated and standard rated. And also remember, we don't look at your one isolated business. If you've got a number of businesses, we add all of them together. Right, that's how you qualify. Right, it could be also at the beginning of the month. Right, if or in which anticipated or expected, right, total taxable supplies, right, are expected. I think my English there. Right, beginning of the month in which expected total sales are anticipated. Let me just say anticipated. Right, to exceed 50,000. Right, based on written contracts. So you have contracts for supply, concrete ones that show that you will exceed the 50,000. Right, so let me read that. Beginning of the month in which expected total taxable supplies are anticipated to exceed 50,000 based on written contracts for the next, right, 12 months. So it must be 12 months unbroken, consecutive months. So when we add your next expected 12 months, we're anticipating that you will reach and exceed 50,000. It must be 50,000 plus one going forward. Right, then you are expected to register. Right, then the last one is determined by the commissioner. Right, as determined by the commissioner. Right, if providing qualifying goods and services. Right, so that's voluntary registration. Right, this must be on your fingertips. It has been asked before in test or in exams. Right, where you are asked to highlight how an entity can register as a VAT, maybe for 8 months and thereabout. Then you explain compulsory registration. You also explain voluntary registration. Right, so remember that's the third requirement for an entity to be registered for VAT purposes. Right, then the last one is that the entity should be, there must be a supply of goods and services by a vendor, right, in the course of furtherance of enterprise. So we then say in the course, right, of furtherance, right, of enterprise. So this is the fourth requirement for a supply of goods and services to attract VAT. Right, so we need to talk about the definition of enterprise. Right, let's talk about the definition of enterprise. Right, so when we talk about the definition of enterprise, it says officially from the VAT Act, right, says any activity, right, or enterprise. So they actually use the word enterprise, but you can substitute that for activity. So any activity carried on continuously, right, carried on continuously or regularly, right, in South Africa, right, or partly in South Africa, right, and then in the course of furtherance, right, in the course of furtherance, right, of which goods or services, right, are supplied for a consideration. Right, are supplied for a consideration. Right, so there are key things that are in that definition. Number one is you must be carrying on an activity continuously or regularly. So which means once-off transactions that are not repetitive by nature will not be defined as enterprise and will therefore not attract VAT because they are not enterprise. Remember, all four requirements must be met. There must be a supply of goods and services by a vendor in the furtherance of enterprise. What is enterprise? An activity carried on continuously. So, for example, if you are betting at spot bet and you win a certain amount of money, if it's a once-off thing, you are not expected to pay VAT. You can pay other taxes, but not VAT, right? Because that's a once-off activity. However, if you wake up every day and you go and sit by the betting shop and you start betting, you are now carrying on an enterprise of betting because you are doing this continuously and regularly. If you then win a certain amount of money, it may attract VAT. Are we clear? So it must be something that is carried on continuously for it to be enterprise. Right, it must be carried on in South Africa or partly in South Africa. So therefore, we are saying for it to attract VAT in South Africa, that enterprise that you are carrying on continuously, it must emanate from or originate from South Africa, or part of it is actually provided in South Africa. Right, in the furtherance of which goods and services are supplied. So there must be a supply of goods or services for a consideration. Right, so that's the definition of enterprise. Then we have got certain activities that are excluded from the definition of enterprise. These are excluded from the definition of enterprise. Right, supply of services by an employee. Right, even if done regularly, and the employee does charge a consideration, which is the salary. Right, we are saying supply of a service by an employee does not constitute enterprise by way of the definition, which means therefore that when you earn money from a salary or when a company pays salary, there are no VAT implications. This is particularly important in terms of salaries. Right, you will see that when you calculate the output VAT of an entity, right, or the input VAT or whatever, right, part of it, sometimes you are given salary as part of the expenses that were paid by company. So you don't include VAT, you simply state that salaries do not constitute enterprise. So a salary is expressly excluded from there, right? A hobby. Anything that is a hobby specifically is not carried on continuously. It's something that is done during someone's free time. Right? Exempt supplies. Right? If you are providing exempt supplies, these will not constitute enterprise. So they will not attract VAT under any circumstances. Right? Then we have commercial accommodation. Right? Commercial accommodation. So when you provide commercial accommodation, which is a service, it may not qualify to be treated as enterprise, which means it may not attract VAT, right? But only if the total rental amount, right, for 12 consecutive months, right, for 12 months does not exceed, right, 120,000. Right, under normal circumstances, commercial accommodation does attract VAT and it qualifies for the definition of enterprise. However, if your total rental income from your rental activities, uh, commercial, when you are providing commercial accommodation, for example, bed and breakfast, B&B, hotels, that's commercial accommodation. Is different from residential when you provide lodgings for individual. That's residential. So here we're talking about commercial accommodation. If your total takings from rent for the year or for 12 months does not exceed 120, then whatever you are doing is then not qualifying to be defined as enterprise, which means it will not attract VAT. Right, then we have foreign branches. Right, if you have got foreign branches, you are domiciled in South Africa as a company, but you do have a branch in the United Kingdom. When that branch makes supplies, those supplies are not deemed to have been made in South Africa. Remember, partly in South Africa or in SA. So if you have a branch here and your branch in the UK does business in the UK and makes supplies there. Those supplies were not taking place in South Africa. So therefore, your supply by your branch in foreign lands will not constitute an enterprise in your hands here in South Africa, and therefore will not have implications, right, in terms of VAT. Right, so that's one instance in which VAT will be levied, that is on the supply of goods and services. It may attract VAT. Right, then the next instance in which VAT is charged is on the importation of goods into South Africa. Right, on the importation of goods into South Africa. Right. So when you import goods from a foreign country into South Africa, right, it does have an implication in terms of VAT. So this is bringing, right, goods into South Africa from an outside country. Right, from a country outside South Africa. Right. The idea is that competition must be fair. Right. If SARS is charging VAT on local supplies, taxable supplies, maybe at 15%, it simply means that in the hands of the final consumer, it will make those goods that are supplied locally expensive by 15% than if SARS did not charge VAT. So therefore, it would then not be fair from a competitions level if someone is bringing goods from South Africa and we don't put 15% on them. It will then make imports cheaper than local what production and may actually impair industrialization or local production. So to equalize the playing field, whenever you bring any good from outside South Africa into South Africa, you have to be charged VAT. Right, so that the playing field is level. We also want to encourage local businesses to operate and be profitable. So you wouldn't want people to bring things from outside the country at a cheaper price than South African manufacturers simply because of VAT. Right, are we on the same page on that one? Right, how to calculate VAT on imports. Right, let's say as an example here, right, an entity, right, acquired, right, acquired goods with an import tax duty value, right, of 240,000 rand. Right, then they say import, right, duty, surcharge, right, was, let's see, work out a figure, right, 11,200. So we want to calculate VAT. Right, so what we call import duty tax value, right? Remember when you buy goods from outside, they come at a certain value. Right, normally SARS use the invoice that you give them. So if you import a machine from another country, right, for 240 rand after converting into rands, that may be your import duty tax value. right? However, on certain goods, if the invoice does not make sense or if they don't trust the source of the invoice, they may give you a deemed cost. Right, if I'm importing a Mercedes-Benz, latest Mercedes-Benz, which is supposed to cost 1.5 million, but I come with an invoice that says 400,000 Rand. Right, SARS can look up because they do have on all goods their expected prices and say this price does not make sense. They will throw away the invoice. They will use their import duty tax value. If I bring the invoice and the invoice says maybe 1.4 with a small discount, they see that it's a fair price, then they will take the price that I'm giving them. So that's your import tax duty value. So when calculating VAT, we'll then say what is the import, right, tax duty value. Right, so we'll have our amount of 240,000. Right, then we'll say add 10% of import duty value. Right, so therefore we'll say 240,000, right, by 10%, and then we'll have a figure of 24,000. So remember now, this is a guide by SARS on how to calculate the VAT on an importation of goods. So this is specified in the VAT Act. Right, once you get the import duty value, multiply it by 10%, and then you get a value, and then you add import duty surcharges. Right, import duty surcharges, these are extra taxes over and above the import duty as determined by SARS. They've got a way of calculating this amount. So normally in questions you'll be given, because the calculation of that 11,200 is outside the scope of the syllabus. It's not a VAT calculation. So whenever you get such a calculation, this will be provided by SARS. This will be provided by SARS. Right, then you add everything and you get your total. So therefore, we now have 240,000, which was given. You add 10% of that figure on top, plus the import duty surcharges, which will be provided to you. Then you get an amount of 275,000. Right, once you get that amount, you then multiply that by the percentage of VAT, which is currently 15%. Right, the answer that you get, that's your VAT component. So that is what you add to your other output VAT amounts. So that represents output VAT. Right, so you should remember that calculation. They've asked for it before in assessments or in the exam to say determine the VAT on an importation of goods. And you must be very clear on that. Any questions, good people? Right, there's nothing much to say or add there. It's simple. When you import goods, we have already defined what goods are, so the definition still stands. So whenever you import goods from outside South Africa, you will be charged VAT, and this is how you calculate the VAT. Now, VAT can also be charged on the importation of services. All right, see the above calculation. Right, so we have already explained what services are, the definition still stands. So when you import services into South Africa, then you are going to be charged VAT on the importation, and the calculation is the same as this one that we have just explained. Right, any questions, good people, on what we have just discussed? Right, remember we are saying when is VAT applicable? When is output VAT applicable? Three instances: supply of goods and services, importation of goods, importation of services. So we have highlighted in detail what constitutes a supply of goods and services, right? And you need to know all of these things in detail because that's what you use to answer the questions. Any questions, good people?
Can I ask a question?
Yes, ma'am.
On the calculation of the of import duties, I just want to know where does that 10% comes from,
The 10% is tax law.
or is tax law?
So it's what,
Oh,
remember the act has got certain percentages that they use. It's like say
yes.
10% VAT.
Mhm.
So it will never change.
Oh, okay. Thank you.
It's always 10% on that one. Thank you.
Thank you.
Sharp, sharp. Right, then whenever we deal with the output VAT, right, we need also to understand what we call zero-rated goods. So let me just write, we are still continuing with output VAT, but this time we want to look at zero-rated goods, right, or zero-rated goods or services, right, as highlighted in section 11 of the VAT Act. So there is a list there that is given to say these things are zero rated. Now remember, a zero rating, this is a taxable supply. It is a taxable supply, but the VAT is charged at a 0%. So it does allow a person who is in business, when you buy your supplies, which are zero rated, but you use them to make taxable supplies, you can claim input tax. But if the goods are exempt, you cannot claim input tax. So that's the difference. It allows you to claim input tax on your supplies if you're in business. Right, so there are a number of things that we have that are listed there. Number one is exported goods. Right, so goods that are going outside South Africa, they don't normally carry VAT. They don't normally carry VAT. Right, we do have some terms that are important maybe when it comes to exportation of goods. Right, one of them is a direct export. Right, straight from SA, right, to an address outside SA. Right, no VAO, right, VAT will be zero rated. Right, VAT will be zero rated on the original invoice. So just to be clear on the terms or terminology that we normally use, right, on exportation of goods. Right, sometimes we also deal with indirect export. Now remember, taxation does require a lot of theory. So you need to be clear about these things, because you can get a question that tells you that there's been a direct export, and then you must highlight or explain the tax, the VAT implications of that export, right? Or they will tell you that there's been an indirect export. Again, they may want you to highlight or just in a few words explain the VAT impact. Now, an indirect export is the goods are initially released to a customer. The goods are initially released to a customer, right, while in South Africa. Angithi a direct export, someone is in Botswana, they've made an online order to a South African supplier and put their address as Botswana. The South African company now couriers the goods from here to Botswana. That's a direct export, right? Or someone comes from Botswana and buys the goods here in South Africa, but the company invoices to the person who is still here in South Africa and may be here in South Africa for a couple of days before going back to Botswana. So that's an indirect export. Now, the goods are initially released to a customer while the customer is in South Africa. So what we do, right, we invoice, right, including VAT. Right, we are going to include VAT when we charge the customer because we are not sure as the supplier whether the goods are going to be used in South Africa or they will eventually make it to Botswana. We don't have control there. Right, remember, if the goods are to be used in South Africa, there is VAT which should be charged of 15%. But if the person is taking the goods outside South Africa, there is no VAT. But at the point of giving the goods to the person who came here to pick them in South Africa, we don't know if the person is going to turn around and use the goods here and not export them. So what we do to protect the tax system, we charge VAT. So therefore, when the customer pays, they are going to pay VAT, which means we owe SARS, we have to remit the VAT over to SARS, even though the goods are going to go to an export country. Now, what happens in this instance is that the customer is able to claim back the VAT at the port. Right, able to claim the VAT at the border when exiting South Africa. Right, are we clear about that? So eventually, an export of goods will not have implications in terms of VAT. Because if we charge the person while he's here, when he's at the border, at customs there, he can claim back and be refunded his 15%. We are simply trying to protect the country by making sure that someone does not come here, says, I'm from Botswana, I want to buy such and such a goods, and then we sell to them and they don't pay VAT. Then they don't go to Botswana, they use the goods here. So therefore, if someone is being given goods here in South Africa, we charge VAT. They can claim it when they exit. Are we clear? Right, next, export of services. Right, so again, this does not attract or attracts VAT at a zero rating. Remember, a zero rating means there is VAT, but it's being charged at 0%. Right, sale of a going concern. Right, if you sell a business, right, and the person who is buying the business is going to continue with the business as a going concern, there are situations in which VAT will not be charged on that particular supply. But if you sell individual assets or property, and the person that is buying is not going to be able to what? To continue as a going concern, then VAT will be charged. Right, we've got fuel levy goods. Right, your diesel, your petrol, and many other petroleum goods. Paraffin, for one reason, is specified separately. Right, remember, this is just a list that is provided to you by SARS. So you need to memorize this list so that next time when you're answering a question and they say calculate output VAT, when you have any of these things, you will simply not put a figure, you just say 0 rated on these figures. Right, remember, it's like doing an income statement. When you calculate output VAT, you have to list each expenditure one by one, and then you calculate the amount of output VAT. So on fuel levy goods, you simply write 0 rated and you put a 0 amount against those type of goods. Right, what else? We have fuel levy, we have got paraffin, right? We have female sanitary wear. Right, female sanitary wear. I think the spelling should be that. Right, there is no, it's 0 rated. Right, job related training. Right, job related training services. right, which benefit the employer. Right, so if a company employs the services of corporate trainers to come and train the employees on a particular skill that is required by the entity. Right, maybe you are contracted to come and give a crash course in terms of how VAT is administered to a company's accounting department. Right, you don't charge VAT on that one, it's zero rated. Right, certain municipal charges don't attract VAT. Municipal charges, there will be no VAT. Right, and then also goods or services supplied by a vendor right, supplied by a vendor acting as an agent of a foreign supplier. Right, so if you're an agent of a foreign supplier, right, you act on behalf of another entity, which is a foreign supplier, and you provide agent services, which means you interlink between that foreign supplier and the customer here in South Africa. Right, so if you are just an agent of that particular company, your invoices will not include VAT. But the goods, when they come into South Africa, there will be VAT at the border. So you can't have VAT twice before the goods reach the customer. That's the thinking there. Right. We also have certain foodstuffs. Right. Which foodstuffs do we include here? Could be put there. There's a long list, I think about 23 or so types of foodstuffs. Right. We have got white maize meal. Right. White rice. Brown rice. Brown bread. Right. Milk, fresh milk. Cultured milk. Condensed milk. Vegetables. Right. Legumes. Don't know what that means. I think those are potatoes, sweet potatoes, right? Lentils, right? What else did I leave? How many am I having there? That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Right? Fruits, dried fruits, right? What else did I leave? Beans, right? What else did I leave there? Right, so we'll check the list and see if we can get the full list there. But these are the main things. Normally in questions, they will give you brown bread, white bread. Right, white bread is not included on this list. Right, we also have mealie rice. So it's just a long list. Right, I know mealie rice is to be included there. Semp is to be included there. Right, and many more. Okay, so you research the list. But most of the time, when you get questions, you probably deal with brown bread. Right? Remember, white bread is not included here. Right? The consumption of white bread is not being encouraged in South Africa, so it will not be included. Right? But brown bread is included, white bread is not included. So usually questions that give you a question regarding foodstuffs, they normally talk about brown bread and white bread. But for interest sake, you can just complete the list there. Right, so these things are zero rated. Then we have a list of exempt supplies. Right, section 12 of the VAT Act. If you go to your textbook or to your study guide, I think they do provide the list. Right, so here we have financial services. Right, financial services are exempt rated. When we talk about financial services, we are talking about exchange of currency does not attract VAT. It's zero rated. Right, issue of loans. Right, mortgage. Right, long-term insurance. Right, however, short-term insurance is not a financial services. It does attract VAT. But long-term insurance does not provide VAT. Right, transfer of shares. So when an entity issues shares from to people who are purchasing shares from them, there is no VAT implication. Right, interest on loan. Right, interest on loans, there is no VAT. Right, issue or sale of cryptocurrencies, about Bitcoin. Right, issue or sale of cryptocurrencies, I think should be other here. Right, Bitcoin, Dogecoin, and similar, that will not attract VAT. So those are what we call financial services, including the interest thereof. Right, then we also have excluded here from financial services. Right, so these items, such as bank charges, right, account fees, right, deposit fees, these are not financial services. They are specifically excluded from being treated as such. Commission, they don't attract VAT at all. They don't attract VAT. So we don't include them. Right, we also have on commercial right accommodation. So there's something important that we need to clear here. Right, remember commercial accommodation is different from residential accommodation. Right, residential accommodation. All right, maybe I should start with the residential accommodation here. Right, so part of what is exempt is residential accommodation. So this is exempt. Right, that is exempt. That's residential accommodation. Right, but in the process of discussing residential accommodation, let's look at commercial accommodation again. How is VAT levied? Right, commercial accommodation normally attracts VAT. Right, we're saying normally attracts VAT, but we have to make adjustment as follows. Right, remember we said if commercial accommodation is below 120, then it is not enterprise, it will not attract VAT. But if it's now exceeds, if the total value of the residential accommodation income and in 12 months exceed 120, there's going to be VAT, but it is going to be levied as follows. Right, we have short-term accommodation. Right, which is 28 days and below. Right, so if you are running a PMP and someone stays in that PMP for 28 days or below, right, then you charge 100% of the revenue, right, will attract VAT. Right, then we've got long-term accommodation. We also have long-term accommodation, right, where we are saying this is more than 28 days. So if someone comes to your building, maybe it's a hotel, it's a PMP, it's a lodge, and stays for more than 28 days, that in this instance, VAT will be levied, right, on 60% of total revenue earned. Right, so obviously when you're doing questions, they always give you this information that maybe you are running a PMP, your customer stayed on average for 25 days within each day, and then they give you total revenue and you are expected to calculate the VAT implication. So remember, if the customer stays for more than 28 days, right, only 60% of the total revenue will attract VAT. Right, are we clear, good people? And then we have, yeah. So these are the items that have exempt supplies. So once you know this, once you have covered this theory, and then next week we do the deemed cost, you are done with output VAT, you should be able to do calculations. So let's hold it here for this week. Next week, when we meet, or the next session, it may be during the week, our advice. We are doing deemed supplies to complete output VAT. Right. Any questions from the floor before we close the session? Right. If there is no question, thank you very much for attending. I shall send the recording after my classes later in the evening. Thank you.
Thanks, David.
Caption.